Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. What are real estate investment trusts and what do they give investors access to? Joining us for Financial Literacy Month, we have Abigail McCarthy, Senior Vice President of Investment Affairs at Nareit to discuss. Abby, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill, and thanks for having me.
You got it. Let's start with the basics. Explain to the audience what REITs are.
Sure. So REITs are real estate stocks. So they can be bought and sold on any of the major stock exchanges or through investment products such as ETFs or mutual funds or other savings vehicles. Currently, 150 million Americans are actually invested in REITs through their 401k plans, retirement savings, or through pension plans. So REITs are actually companies that own, operate, or finance income-generating property. And they own properties throughout many different sectors of the economy, including some of the more traditional sectors like retail and hotels, or some of the more modern-day economy sectors like cell towers, data centers, and self-storage facilities.
Why do advisors recommend REITs to their clients?
So 83% of financial advisors are actually recommending REITs to their clients. And the reason that they're doing so is because REITs provide strong, stable dividends and also provide investment portfolios considerable diversification benefits. So the portfolio diversification benefits that REITs provide are that they offer a significant risk-adjusted return. So Morningstar recently conducted an analysis that showed that if you add 10 and 20% of REITs to a traditional stock and bond portfolio, you actually increase your return while lowering your risk. So other diversification benefits of REITs are that they do own properties across all different sectors of the economy. So as I mentioned a couple sectors before, REITs actually own property in 12 different sectors, which also can include industrial, logistics facilities, office properties, residential, and timberlands, actually, to name a few additional ones. And that diversification benefit also has benefits to a portfolio. And then the last point of diversification is really geographic diversification. So there are over 200 REITs in the United States, but there are also REITs in over 41 countries throughout the world. So investors can really benefit from that geographic diversification as well.
What do REITs give investors access to?
So REITs give investors access to really valuable real estate properties that they don't have to independently own, manage, or finance. In addition to that, REITs really provide investment benefits through every different life stage, whether you're an early saver just starting out in your career or all the way into retirement. And for the early saver, REITs provide that long-term total return with capital appreciation that helps grow the portfolio over time and is useful in tax-deferred accounts. For the retiree who is looking for additional income sources, REITs' stable and high dividend stream over time really can provide that extra income that a retiree might be looking for.
What's the appropriate allocation for REITs?
The appropriate allocation to REITs really depends on an investor's risk tolerance, their overall financial goals, their investment horizon, but multiple studies that have been done by leading investment firms have shown that the optimal allocation to REITs is somewhere between 5 and 15%. And if investors are interested in learning more about those life stages and where REIT allocations fall within those different periods of life, I really recommend that they go to REIT.com/quickfacts, where you can find out a bunch of more information about the benefits of investing in REITs and also those different allocations across life stages.
All right, Abby, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thank you, Jill.